Hare Krishna. Welcome to Tax YouTube channel. This is CA Rohana Pingre, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to the video series on concurrent audit, session 6. And in last session, that is in number 5, we have discussed understanding branch operations. And now today in session 6, we will discuss audit of deposits account. So let's dive into it. Let me allow to share my screen. So deposits form the core liability base of banks. Every rupee mobilized from the public creates what a fiduciary responsibility. From a branch audit perspective, deposit accounts are high volume, operationally intensive, system driven, but risk prone and highly regulated. So deposit audit ensures what? Protection of customer interest, compliance with RBI directions, prevention of fraud and misappropriation, and accurate reporting in financial statements. So concurrent auditors what play a preventive role, not merely a post-mortem role. Early detection of irregularities in deposit operations protects the bank from reputational and financial damage. So let's understand the regulatory framework governing the deposits. So deposit operations are governed by multiple regulatory layers. First, Banking Regulation Act 1949 governs what acceptance of deposits. RBI master directions, that is, it governs interest rates, KYC norms, inoperative accounts, etc. PMLA 2002 deals with anti-money laundering framework, and DEF, DIP scheme, transfer of unclaimed deposits to RBI, and internal circulars and board approved policies. So concurrent auditors must ensure what? Branch compliance with latest RBI circulars, nomination facility requirements, KYC periodic updation, and customer grievance redressal. So moving further, let's see savings bank accounts risk areas. So savings accounts are what? Retail heavy and vulnerable to fake KYC, identity theft, mule accounts, misuse for layering transactions, incorrect interest calculations, dormant account manipulation. So auditor must assess what? Whether accounts are opened strictly as per KYC norms, whether transaction monitoring alerts are acted upon, and whether interest is system driven and accurate. Let's see audit checks with respect to savings accounts. So key audit procedures include related to this under account opening documentation, proper KYC, customer due diligence, and risk classification. Then, with respect to PAN or Form 60, mandatory where applicable, and proper reporting for high value transactions. For that is a one-time 50,000 transaction, PAN is necessary. Under nomination, mandatory offer to customer, proper recording in CBS. Then under interest verification, check applicable rate, minimum balance conditions that need to be checked, and quarterly credit correctness. Under transaction scrutiny, cash deposits near reporting thresholds, high volume activity inconsistent with the profile that is classified as per the profile. Means most of the times political or actors are categorized as a high risk under the classified as a high risk classification. So in that way, we need to check. Next. Let's move to the current accounts nature and risk. So current accounts are generally business accounts, and key risk includes what? Shell companies, GST related fraud, accommodation increase, layering of funds, and diversion of loan proceeds. Means end use may not be as per the loan taken for whatever purpose. Concurrent auditors must ensure that current accounts comply with KYC for non-individual entities are not opened, we must see, are not open in violation of RBI restrictions on multiple current accounts that we need to have a check. Let's understand KYC and operational checks with respect to current accounts. Audit steps include what? Entity verification. Under that, partnership deed, memorandum of association or article of association with respect to companies, registration certificates, PAN of entity, then under beneficial ownership, we need to see mandatory identification under PMALA, ultimate natural person control, under board resolution, proper authority for signatories, under transaction review, sudden high value RTGS or NFT, with that we need to see also that frequent inward outward circular movements, and under diversion check, loan funds used for unrelated transaction. That is most of the times happen in many branches of the bank. Next, let's understand term deposits. That is audit focus areas for the term deposits. So term deposits, that is FDs or RDs, involve what? Interest liability calculation. Audit must verify rate applied as per the card rate on date of the booking. Very important. Rate applied should be of the interest as per the card rate on the date of the booking. Additional rate for senior citizens correctly applied, that need to check. Proper TDS deduction under Income Tax Act and Form 15G or 15H validation. That also need to be one of the core area. So under term deposit, under renewal and closure, we must check under the renewal as whether that is as per the standing instruction, fresh interest rates applied, no bank dating. Then under premature withdrawal, we must see penal rate applied correctly, approval hierarchy followed, and no unauthorized waiver. And under line marking against advances properly recorded, that also need to be checked. Let's moving further. Let's understand bulk deposits and special audit concern with that bulk deposits. So bulk deposits significantly affect what? Liquidity. Audit must ensure what? Rate approved by competent authority within the policy limits, proper documentation, and no undue favor. So check for structured deposit split to avoid classification, and premature withdrawal to gain what? Higher rate arbitrage. Let's understand premature withdrawal controls. Okay, under that, risk include staff collusion, waiver of penalty without approval, concurrent, that is again splitting of deposit. So as a concurrent auditor, we should review the exception reports, top premature withdrawals, and staff related transactions that need to be taken care of. Moving further, let's understand dormant or inoperative accounts, and that is risk profile. So dormant accounts are vulnerable to the fraud because customer inactive, low monitoring, and sudden withdrawals possible in that. So auditor must verify proper classification after 2 years of inactivity. Okay, then system restriction in place and dual authorization for reactivation. Okay, that must be taken care of. Moving further, let's see audit checks for the dormant accounts. So reactivation must require what? The written request, then KYC update and proper identification. So audit should examine sample of reactivated accounts, large withdrawals immediately after activation, and staff account involvement that need to be taken care of. Next, moving further, under unclaimed deposits and DIF, we must see deposits unclaimed for 10 years must be transferred to DIF, that is Depositor Education and Awareness Fund, DEAF. So that need to see. So maintained by the Reserve Bank of India, audit must verify timely transfer to that, accurate reporting, and customer claim processing mechanism that we need to see. So under DIF, transfer, what will be the audit procedure? Let's understand that. Auditor should review list of the accounts more than 10 years. Okay, we need to take the list of accounts more than 10 years, verify the transfer entries, and ensure no retention at branch. Confirm the CBS tagging. An improper transfer can lead to what? Regulatory penalties. Moving further, let's see common fraud red flags in the deposits. So concurrent auditor must act as a early warning system. Our role is that. So red flags may include cash deposit just below the reporting threshold, frequent RTGS to unrelated parties, round tripping, and transactions inconsistent with the classification of profile, whatever classification as a classified. So that these are the four red flags. What? Cash deposit just below reporting threshold, frequent RTGS to unrelated parties, and round tripping and transaction inconsistent with the profile. But in case of means we need to check frequent RTGS to unrelated parties, we must plus first have the related parties list to selected customers, whatever customer we have selected for test checking or as per the risk profile. We must first have the related party list to see whether there are any frequent RTGS to unrelated parties. So that is what we need to take care of. Let's see reporting by the concurrent auditor. So deposit related findings must be reported month-wise, categorized by risk and escalate if systematic. So if fraud suspected, report immediately to higher authorities as per the bank policy and RBI guidelines. Moving further, now we are reached to our conclusion part for the today's discussion. So deposit audit is not a mechanical verification. It requires what? Professional skepticism, regulatory awareness, analytical review, and understanding of customer behavior. So as a concurrent auditors are custodians of depositor confidence. So that should have in the mind we are the custodians of the depositor confidence. So by ensuring proper KYC, interest accuracy, monitoring dormant accounts, and compliance with DIF norms, we protect bank, depositor, as well as the financial system of the bank. Very important. By ensuring what proper KYC, interest accuracy, monitoring dormant accounts, and compliance with DIP norms, we protect bank, depositor, as well as the financial system of the bank. So that's it for today. So before closing, we also should know the deposit accounts represent the confidence of the public in the banking system. As concurrent auditors, our responsibility extends beyond the checking forms and registers. We are the guardians of the compliance, risk manager, as a risk manager and a protectors of the public funds. So in the next session, before moving further, we should keep that the deposit audit of deposit accounts we need to see as our responsibility extend beyond the checking forms and register that we need to keep in the mind. So thank you so much. Please note down my contact numbers. If you have any questions, observation, queries, suggestion, then please do let me know via WhatsApp. You can also email to me and you can also comment below the video. Thank you. Thank you so much once again. If you are not yet subscribed to Axo YouTube channel, then do subscribe it so that you can have a chance to learn various knowledgeable updates and video series from the Tax YouTube channel. Thank you. Thank you so much. Hare Krishna.